Hello and welcome to Nirmal Bank's another episode where we are going to discuss about mutual funds insights, how this industry is going to shape up. I am your host Ritu Podar and I have a special guest with me, Mr. Anthony Heredia. He is a MD and CEO at Mahindra Manulife Investment Management, and he is also holding a very prestigious position at AMCs as a vice chairperson. So, hello Anthony and welcome to our show. Firstly, I would like to ask you, we are talking about the mutual fund industry broadly, and when we talk about the penetration and we compare with the global peers, we see the penetration is not that great. What kind of five things do you see, we can do it, where we can, see the growth in mutual fund industry?
So Ritu, firstly, thank you for having me on your podcast. The way I look at it is, in the last few years, I think we made a lot of progress in that regard. I think many fund houses now look at success measured in terms of the number of investors or number of customers they are adding. I think the mutual fund Sahi Hai campaign that AMFI created a few years ago is a start in that direction. The amount of penetration that we are seeing with SIP, I think, is the first key element, I think, to increasing the penetration. The second, I am very fond of telling this story. I joined this industry 30 years ago as a management trainee, and as all good management trainees, PPT banana padta hai ki why you should be in this business, and the slides are standard US penetration and so on and so forth. Quite honestly, this is probably my 30th year in the industry. Only in the last 5 years, I've seen that first slide come to life, in the sense of where we are talking about financialization of assets, where people are saying ki mera saving not only goes into real estate or gold or government saving products like the past, but I will consider investment products like mutual funds. So to my mind, I'm not worried about the penetration, and I'm not thinking that we should find 5-6 things to do. I think if we keep doing well in terms of managing customers' expectations, creating returns, markets are supportive, I think the amount of customers that will buy this product will increase multiplied effect in the next few years.
So you have talked about that most of the customers are coming and or investors, they are going to invest in mutual funds, and they are investing because last 3 years number was quite good. A lot many Gen Zs are coming, and investing in this product, but they have a swipe right and left habit. So what do you see, what kind of a change you can bring on the table of being a, mutual fund expertise in the market, because they are very short in tempo and they do not want or they don't understand the long-term history or long-term investing probably.
So Ritu, actually, I agree with you at one level that I instinctively struggle with how do we create the right marketing platforms to attract Gen Z. Having said that, the actual data, and I've seen data from CAMS and Carby in terms of the percentage of Gen Z investors that have been investing in mutual funds in the last 3-4 years has gone up more than 20x. So Gen Z has actually gone up far more than the typical investor. So to some degree, I think we are doing something right, and I think somewhere you've got to give them, the belief is that Gen Z is about spending, it's about Insta Reels and all of that, but I think there's a lot of thought that they also put in, which is why they're investing. I'll give you an anecdote. So 2.5 years ago, when we thought about how do we do this, and therefore, you look at the traditional platforms are not the platforms you think about, right? You then think about Insta and so on and so forth. So we actually looked at a digital agency for whom we were the first financial services client, not even the first mutual fund client. And the idea was they were absolutely superstars at Gen Z, they were absolute superstars at the media that Gen Z consumes. And the idea was we will then talk to Gen Z in the language that they are comfortable somebody talking to them in. I'll give you a very simple example. I was at a session just 3 weeks ago, and the point is we don't call our investors customers. We keep calling them investors, right? And if you start thinking about people in a slightly more warm sense as customers, think about what they like, what they respond to, I think we'll get there. But I agree with you. I'm reiterating. I don't think we've cracked the code, but at least data suggests that Gen Z is still buying. It's not like they're not.
So probably we need not to crack the code. Our market needs to, because last 3 years we have seen a one-way rally in the markets, and probably Gen Zs has not experienced markets volatility. So do you think this is the time or testament time where the Gen Z's investments can look forward?
So I can look at it as a very nice positive or a big negative. I mean, if markets correct as they have in some sense in the last 3-4 months, I think Gen Z has been doing direct equity and FNO probably at a much higher degree than mutual funds, right? So if markets correct, how they react to the first disappointment in their investment journey could shape how they invest long term, right? And so to that extent, it's important to think about. Having said that, I've often found that we talk about mutual funds being the better way to invest rather than investing in direct equity. And sometimes you need painful lessons to make that shift, right? And so I think as markets correct, Gen Z or anybody for that matter, a lot of first time investors in the market in the last 4-5 years who have come to believe that there is only one direction equity markets go. I think the kind of correction we are seeing can result in them migrating to mutual funds in a lot more degree than what has happened in the past. So I'm not trying to put this as a silver lining to every kind of problem statement, but I've seen this in the past, that you have to have some painful lessons along the way eventually to create wealth. And I think this correction is obviously not painful, it's just a minor correction at this point, but maybe that will cause them to look at mutual funds a lot more.
Okay. So SIP inflows is like one of the talk, going in the markets always, and last 2-3 years we have heard like it was a supporting factor to the markets because we have seen FIIs outflows altogether. So no one actually talks about the discontinuation, no one talks about the net numbers, and MFI doesn't disclose this number as well, like what is the net SIP inflows. What's your thought on that?
So, I mean, the answer, unfortunately, I'll try and keep it simple because the answer is a bit technical. It's not about not disclosing the net inflow because it's actually apples and oranges in a sense. Let me explain. So, if I have invested in SIP for the last 6-7 years in a Mahindra fund, right? Now, if I put a redemption of, let's say, 20,000 rupees, it is a redemption of 20,000 rupees from that folio where I've been doing an SIP for the last 6 years and my SIP continues. Now, my SIP installment, let's say, is 2,000 rupees. So, the way of looking at it could be net inflow will be negative 18,000 because 2,000 aaya or 20,000 chala gaya. But 20,000 is a redemption partially of investments of 2,000 done over 6 years, right? And which is why we say that the net inflow is not probably the best way to look at it. It's the way I look at it, and I'll tell you, I've been pleasantly surprised by the strength of the SIP flows in terms of the new additions. Again, people look at SIP stoppage ratios, but what are you dividing by what? You are dividing the number of people who discontinued or an SIP that ended by the additional new SIPs that came in. But they're two different numbers. So the way I look at it is, it's important to look at it in isolation. In the last 9 months, average new SIP additions have ranged between 46-47 lakhs per month new to 62 lakhs, which is an all-time high about 3-4 months ago. We've now dropped to 54. So that kind of suggests that people are not coming into SIPs and starting new SIPs the way they used to. So I take that. But the number of people who are discontinuing SIPs in the last month was 44 lakhs. Is that the highest number of discontinuations in the last 9 months? The answer is no. It was 46 lakhs earlier, it was 42. But the point is 42 divided by 62 kind of suggests that SIP stoppage ratio is very nice. But 44 divided by 54 suggests that SIP stoppage ratio is at a particular high. To my mind, that's not the point. My question is, am I still trending above 50 lakhs in terms of new investors starting an SIP? And am I broadly still in the range of 38-40 lakhs in terms of people discontinuing? And I think the answer eventually is that, is the 25-26,000 crore number monthly holding? That to me gives me a larger message, and I will still say this, I'm pleasantly surprised that it has held.
So another part is with TER rationalization is another hot topic few months ago, and how do you see the fund houses are going to take it? Because there are a number of funds, AMCs are launching, the new fund managers required, the research team behind that is required. How the law or this TER rationalization is going to work out in a favor of AMCs?
So 2-3 quick fire responses. One is, I think it's down to each fund house to decide their strategy, but I think you've got to launch funds only when you are convinced you have the investment capability to do so. Right? If you succumb to the fact that NFOs are getting more money and you keep launching funds, then you are inevitably putting pressure on your own investment performance. Makes me to a second point. I think one of the biggest changes I have seen that has happened in the last 3-4 years that people don't talk about is fund performance, and consistency of fund performance is a very, very significant factor when somebody chooses which fund to invest in, including when they're doing it through a distributor, right? So it's my biggest ingredient for future success is going to be the consistency of delivering above average fund performance, not best performance, above average fund performance, right? So if I keep launching more funds and I keep therefore having my fund managers having too many things to do, eventually everything will become average, right? So I will have many funds, all average performers. To my mind, I don't worry about TER rationalization impacting that side of the business, because what flows are telling me, and Ritu, you did an outstanding analysis just a few days back, right, on the kind of flows that have come to various fund houses. I am telling you, just slap the performance track record on that, it will be an identical slide, right? So which tells you that as a fund house, when I have only 1 rupee of resource, even if it is constrained because of TR rationalization, I will have to find other ways to cut costs. Fund management resource cost cutting, I think in the next 5-10 years is a recipe for disaster. That's certainly one that we are not planning to pursue.
Okay. So at the same time, the soon to be launched the new asset class category is going to come. What kind of what's your thought, and how the other products like mutual funds, PMS and AIF are going to impacted by that particular category?
So again, like I said, there's always a silver lining argument to most things that I say. Firstly, most funds will probably be permitted to launch one fund in each category, right? So if you kind of think about number of AIFs that are there as products and number of PMS products, there are thousands, right? So even if 44 asset managers or 30 asset managers launch one product each in 3 or 4 categories, we are talking about 150 schemes. If you think about the distribution reach that the current mutual fund houses have, it's probably far more than what PMS and AIF providers have. So in some sense, I would believe they should look at this positively, because what kind of market opens up to them as a consequence, right? Because let's assume because of our distribution reach, because of our tier 2, tier 3 city kind of access, we are able to sell a specialized investment product, let's say a concentrated 15 stock portfolio to somebody. What is that somebody who's investing 10 lakh rupees going to do next? They're going to search for, are there better products? Are there different products? And that may come from a PMS and AIF provider that they don't have the reach to. So I frankly think that when the dust settles, people will look back on this 2-3 years later and say this was a great thing for even the PMS and AIF industry. And frankly, for the MF industry, I am very excited, because it gives us an access to create a differentiated product, which I think for aspirational India makes immense amount of sense.
Okay, nice point, Anthony. Here, you said like this particular product will open a door for the PMS and AIFs as well. But one thing we see among the investors, there are a lack of knowledge about the risk, what kind of a risk they are taking. So, being a key person of MFI, I am asking you like what kind of a steps MFI is taking to help investors to understand what kind of a risk they are taking. Is any kind of a thought on that?
So If you think about the last two campaigns, two of the last 3 or 4 campaigns, they've actually centered around fixed income, saying that fixed income investing is good for you, fixed income investing is possible via mutual funds. So it's clearly not an industry body that says that because we're getting all this money in equity, we should just keep doing advertising on equity, right? Number 2, there was actually a series only on risk, right, where we had people talk about how they perceive risk. So it's not like we don't believe that it's our responsibility, but I will also say this. This is what the customer should hear from us a lot more often, but also remember that risk is a very financial term. So to my mind, one of the things that we are doing, and I think we should do a lot more of, is push people to think about investing much more for the long term. Because as you and I know, the longer you invest, the risk of investing drops very significantly, right? So if you ask me personally, I would much rather think about pushing people to think long term rather than trying to explain to them what is risk. Because to my mind, if I'm able to convince 10 people to expand their horizon from 5 to 10 years, as opposed to trying to explain what is risk to 100 people, I think those 100 people will not understand it beyond a point. But if I'm able to convince these people to move it to 10 years, I've already dealt with the risk, right? Because in equity investing in particular, time is a massive risk mitigator.
Next is, I would like to congratulate, to make Mahindra Manulife as such a established AMC or established financial services company here, where you help investors to get or create wealth in long term. How do you see Mahindra's journey from here? What all the things you would like to or would like to implement to take Mahindra in top 10 AMCs?
So Ritu, आपके मुंह में घी शक्कर top 10 is a long distance away, but I'll tell you, I'm very clear. This is unfortunately or fortunately an extremely simple business. It's a simple business where if you manage money well, people will give you money to manage, and they'll give you more money to manage. So to my mind, whether it's about how we've grown in the last couple of years from 10,000 to 30,000 where we are today, or whatever number we reach, 20th, 15th, 10th, it will always be based on how successful we are at managing money well for our customers. If we are successful 8 out of 10 times, we will strike some of those numbers inevitably. And I would say that's the way this industry has evolved to. That's one. 2, having said that, I would believe, and I'm a bit of a traditional guy, right? I worked in this industry for 30 years. So you have this, people may say घिसा पिटा way of saying that हम distributors को push करेंगे, हम tier 4 cities में जाएंगे. I think one change that will happen is I think people will buy funds a lot more on their, what shall I say, sixth sense perception, which means the role of marketing will be a lot more powerful than it has been historically. Because I have also seen that for me, as Mahindra Manulife has done well performance wise, it also means that across media, our funds keep getting picked up as having done well, which then means that when the customer is going to his distributor or even going directly saying, where should I invest? If our name comes up, somewhere at the back of the person's mind, there is a slight comfort कि हाँ ठीक है सुना है. So I think the combination of us managing money well and smartly concentrating on ensuring as many people are aware that we are doing it means that the size inevitably follows. I don't want to put the cart before the horse. Focus on top 10, then what will it do to become top 10? My point is manage money well, operationally do things efficiently, make sure enough people know that you exist and what you are doing. Size to apne aap aa jayega.
Very interesting, and I wish you all the very best. So to see Mahindra Manulife in top 10 AMCs soon. And thank you, Anthony, for talking about the market industry and about the how we can see this industry going forward. Thank you for.
Thank you. Thank you very much. Pleasure being talking to you.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.